Good morning and welcome to the Power of RegTech. Welcome and thank you all for being here. I see these numbers just ticking up and I'm just so happy and thrilled to have you all join us this morning. I was looking at the demographics, it's amazing. There's people from Cyprus, Malta, Belgium, France, Germany. The list was going on, Belgium, Portugal, the USA, and just this morning, a whole team from Standard Chartered in Singapore. That's so exciting for us to have you all join us, so welcome. We have an amazing agenda. We are so excited about what we've put together here. I'd like to take a moment for a few special thank yous. Firstly, and Cedar Rose. You'll be hearing 20-minute presentations from each of these companies. And the whole idea is to give them a platform for them to showcase their companies, and we've provided them with an amazing audience, and we hope that everybody pays attention and is all enjoying all the presentations. On the other hand as well, we'd like to thank all our speakers for taking the time for their contributions, for all the effort they've made in coordinating all the sessions and all their inputs, so thank you for that. Our supporters as well, thank you so much to all our media partners for again promoting the event for us and supporting us. We greatly appreciate that. We're just really excited with how the webinar series is going for QUBE Events, and we really do hope to expand and grow and offer value as we continue. So now a special thank you to the QUBE team as well. Actually, we're sitting in the QUBE offices for a change instead of in quarantine, so that's pretty amazing. So it's great. Marta's in Poland. Just a big thank you to the team for putting it together again. It's pretty amazing what they do. And yeah, I'm going to hand over to Robert, who's our industry expert and a great friend of QUBE. And thank you so much for all your support and always being there next to us. So I'm handing over to him, and thank you everybody for all your time and your contributions. Thank you.
So thank you very much for that intro, Lily, and thank you, Marta, again for putting together such a great group of people and a great storyline for today. So I think this is the fourth webinar in quarantine that we've done now, and I think we're all kind of getting used to this new life as the easing starts in the UK on the 4th of July. People will be able to go back to restaurants and things, so that will be a nice change. A lot has been happening in the payments industry over this period. A lot of business as usual, a lot of growth in areas like online purchasing, and obviously there have been some casualties around the areas of the travel and leisure industry. We put our hearts out to those guys who've had a very, very tough time. Equally, I don't think the regulators have pulled back, and we've seen some real horrible adverse publicity, unfortunately, this week in relation to Wirecard and some of the stuff that's been going on there with Marcus Braun, unfortunately. We hate to get this stuff because we live in a relatively fragile industry as it is, so we like to all be good guys. We don't like bad stuff coming out, but at the end of the day, when these things happen, we have to let the news take its course. On the positive side, there's been continued great valuations in the marketplace for a lot of the newish fintechs. A company only a few years old, Checkout.com, raised its latest round of finance, and it had tripled from its previous valuation, which was only in November 19, and it's gone up to 5.5 billion valuation, and you see it alongside the still relatively new Stripe and Adyen's of this world, who are well into the 30 billions in their valuation. So this industry has got a lot of legs, and in the market we're in at the moment, we have seen a drop in transactions, but we have seen a massive spike in growth in online transactions. And that's, again, a little bit where maybe the part of today's talks can come around in relation to the whole area of RegTech. RegTech, a new and upcoming area, and as we get stronger and bigger in the marketplace, the regulations are coming at us from all sorts of angles. We find all different jurisdictions, not just the EU, coming up with new regulations. The most recent one that the FCA is pushing in the UK relates to the 5th Money Laundering Directive and the ability for that to cover cryptocurrency exchanges. And they were saying only this morning that they feel that a lot of those exchanges are unaware of the first deadline, which is the 30th of June. They're expected to put their registrations in if they're an existing cryptocurrency exchange by the 30th of June in order to get registered on or before the 10th of January 2021, when at that point, if you're not registered, you can no longer trade in the UK as a crypto exchange. And the rest of Europe also has the same regulation in place. So cryptocurrency exchanges out there need to be aware of this. But I am not going to take up any more of your time. I will be moderating a number of the sessions as we go through. But if Marta can flip up the agenda for today. Oops, no, maybe she's going to slip up our first speaker. Damien is our first speaker of the day. I'll go into the agenda a bit later after I've introduced Damien. So Damien is a long-standing friend. I've known him over 15 years. He's an industry specialist in payments for many years. Yeah, we both have the grey hairs now, unfortunately. I think Damien quite a few less, but at least he's got more hair. Damien, I'm going to pass over to you. QGen, thanks very much for sponsoring this event. You've done a great job, and Damien, please take over.
Robert, good morning, everybody. Thank you very much, Robert. Hold on, to be honest, it's the first time I'm doing first time I'm doing things, so I just need to learn how to move the slide. Okay, I believe I can see that. Okay, very good, thank you. Yes, just as a pleasure to be here at the QUBE event. So as Robert said, it's the 4th event so far, and I think despite the virus, this forum has stayed alive with the buzz and excitement of enterprise and nice can-do spirit. So I think I've joined them all. Apart from one, I believe I had to miss. So it's something we always look forward to, and it's an honor to speak, I believe, and deliver the opening speech indeed at this event. So this is a RegTech talk, and there's 2 parts to my talk. We operate within the RegTech space ourselves, fairly heavily involved, and we see both extremes. So on the one hand, we have a self-sovereign identity blockchain app, which is probably pushing the boundaries in terms of technology in the space. And on the other hand, in the merchant due diligence onboarding space, we still see a lot of pain points, where RegTech fails, and there's a lot of manual intervention required. So I'll go into that a bit more detail later on. So if I start off with, so just as a brief introduction to ourselves, we are based in Malta, as Robert said, and we've been in the space for coming up to 10-15 years, and we provide a number of AML solutions, mainly KYB and KYB solutions. So very much focused on onboarding in the payment space. All our clients will be banks, tier 1 banks, or payment companies. We're not really focused, or we're not particularly specialized in domestic markets. Where we come into our own is where we can support clients in a cross-border environment. So, for example, a typical client would be a EU institution with a global footprint, and we craft customized onboarding solutions, to align to a client's, onboarding policies, risk appetite, regulatory requirements. And then where all that fails in terms of the RegTech stuff, this is where we have a big manual component that plugs all the gaps. So we can talk about that later on. But let's start with blockchain and identity. So here we go. So it's interesting, isn't it? Like, you know, so there are some bright sides to COVID, you know. So one of them is no travel. Okay, for some people that's a good thing. For some people, I guess that's a bad thing, you know. And the other big advantage I see, and I touched on it with Robert earlier, was that, you know, no passports. You know, no passports means no lost passports, no turning up with the wrong document or no document. And I still find it, you know, remarkable that in the 21st century, you know, with so much tech and what have you around us, you know, we still are reliant, you know, on a single piece of paper, you know, or a single document. We can go to London for a week, and all we need to take with us, apart from our essentials, are effectively our mobile phone, and we can use that to hail a cab, you know, book our flights, book our accommodation, make payments at restaurants, pubs, and anything else we need to buy. But without that identity document, you know, we're not getting on that aeroplane, you know, or when we arrive at a place, if we've lost it, we might be sent back, you know. So we are still, you know, we are still reliant on that document. And when we set out for this, when my co-founder and I set out for this like 2 or 3 years ago, we were very driven on this point, you know, that there's a big gap here, and why are we so far behind when it comes to identity documents? You know, we were looking at blockchain at the same time, and, you know, there's a lot of, this is probably 2017, so there was a lot of, you know, let's say noise about blockchain and ICOs and what have you. So it was easy to get carried away, and the market was getting carried away. But in reality, you know, for a self-sovereign identity application, for a KYC application, the blockchain is absolutely perfect, you know. So this is what we set out to develop, which we did. It took us a little bit longer than we thought, because there was lots of noise about blockchain, but there was no expertise, you know. So we made a lot of expensive mistakes. I had to learn the hard way from a technology perspective. You know what, we built up a in-house team of developers, you know, that developed the application. And from a front-end perspective, it doesn't look anything vastly different from any other KYC application that you see. You know, the customer downloads an app, or is invited to do so by his subject person, by his person applying for a product. He downloads the app from the Play Store or the App Store, and effectively, you know, does what he expects. You know, there's a selfie taken, a photo of a passport and or an identity card, proof of address, PEP, sanction check, AML. There's a very good, you know, front-end technology, you know, that does the OCR check, liveness check, and then compares the face to the document on the identity document. So all that kind of stuff is really nice. And then what we do as well, you know, to ensure that it's top quality KYC certificate, is we have a team of agents, compliance officers, and all the KYC applications go through them, and they verify that documents are correct. So it's a mixture between technology and a human intervention at all. And when the client, the customer in this case, you know, goes through that process, they end up with a reusable KYC certificate on their phone. So they can now turn up at a merchant site, they can walk into a bank, they can turn up at a airport one day, you know, and rather showing a passport, they can show just show their phone, and the information is on their phone. And most importantly, they give consent to when that is shared. And for the merchant, for the recipient of that information, they have full, you know, validated certificates. So it's not just us doing the work. We're using, you know, apart from us, we use third-party data sources. So we might use, for a UK customer, might use Experian, for example, for the electronic check. We also give a report on the manual check as well. So the incumbent merchant, let's say, you know, who's a regulated body, if the auditor walks in, he can show, you know, full certification of every KYC that is accepted from our application. Okay, but there are some. We were focused on, you know, some principles of digital identity. These are the ones that we had ourselves, you know, and as the market and this space has developed over time, they seem to have become the de facto principles of a self-sovereign identity application. So at least we were more or less on the same lines. And if I just run through what I believe the key components of a digital identity principles are, you know, the first one is in inclusion, you know, so everyone has a right to a digital identity. We don't want, you know, another divergence of, you know, people who have digital people that have the haves and have-nots, you know. So people suddenly, you can, some people that have identity, can start, contracting and doing things, and others are left behind, So it's very important to make the process as simple as possible. There are challenges here, like for example, we're working with a large European telco for KYC of SIM cards. As you probably know, SIM card registration anonymous SIM card registration is no longer allowed. And we're working with a telco, so when the punter goes in to buy a new SIM card, he shows his nominal application and gets his KYC. But in some jurisdictions, that's, it's only, you'd be surprised, only 40–50% of the population have a smartphone. We think everyone has a smartphone, but there's a huge amount of people that don't have smartphones. Anyone over 50 or 60, it still tends to be on the old phone. So there are challenges and issues to overcome. It has to be simple. We can't make it too complicated. And then the two most important points, it has to be confidential. The data has to be kept, confidential. And the most important thing, I believe, is consent. This is the big change. This is what, the blockchain brings, the fact that the data, the KYC certification and the privacy data is only shared with their consent. At the moment, we have no idea where our data is. It's sitting on some stuff on Facebook, Google, there's stuff sitting at Experian, Call Credit, God knows where, and we don't know when it's being, sold and used, So what this does is it really restricts the movement of your data. You give consent, you turn up at a merchant site and you want to apply for a product, you need to, depending on the amount, say for example, it's a prepaid card, depending on the amount of the load of that transaction, you do not have to give your full, family history and ID and proof of address and source of wealth, source of funds. You just give what you need to give, So that's why we separate it in levels, so they can just share just their ID, they can share just the proof of address, So and then things like the AML check and sanctions, adverse media, all happens in the background. So this is a very, very key point, and this is what the blockchain brings. Transparency is important. They have to be able to see what's being used without saying to what is obvious. Security, integrity are key points. And then the natural things, like fair use and choice. So these are the principles we see of digital identity. And whilst for a long time I believe we were a voice in the wilderness, it's nice to see as we see some other projects and some big schemes actually, like MasterCard, actually picking up on this now. And there are other initiatives, similar to this, we have an ecosystem and a self-sovereign identity certificate. Now, the one I'm mentioning over here is Bank ID. Now, this is a non-blockchain solution. This has been around for 10 years. In those 10 years, they got 12 million users. But everybody in Sweden and some other Nordic countries has, on their mobile phone, a Bank ID system. So if they turn up at a gaming site, if they turn up at a merchant, if they turn up at a financial issuer, all they need to do is straight away on registration, they'll be asked for the Bank ID. It's a real-time system. It gets the information from the participant banks, and that is a proper KYC certificate, which is recognized by the regulators in those territories, recognized now by the tax authority, so you can even use it to file your tax returns. It's recognized within the EU as a digital signature, and by regulated and unregulated businesses. So these closed loop is the wrong word, but these self-sovereign identity applications do work, and it's just a matter of getting them out there and most importantly, getting the ecosystem in place. So, as I said before, MasterCard are running a couple of projects now in a couple of countries, in North Macedonia and in Australia. We're in early talks to do something in Malta as well. And what they provide is the rails to an extent, and they also provide obviously the ecosystem. They have the credibility, respect from the banks, from the financial institutions, from the regulators, and once you have those, then obviously you have the all your merchants and your businesses, involved and trusting the system as well. So it's good to see, the big, MasterCard now coming in. I mean, they've been talking this space probably for a year over. They have a strategy themselves. We engage with them quite a lot in this area. So, we firmly believe, that identity is the core of any digital transaction going forward. So in our minds, but as Robert remembers from PPAGE, you can't be too early. In our minds, it's pretty obvious that this is where it's going to be, but we don't know how long it's going to take to get there. There are some barriers when something is new. There are some barriers, So one of the barriers is blockchain itself is a barrier. There's still some reticence and some bad press about blockchain and mixture with cryptocurrencies. This is less and less now. Probably the biggest barrier would be, when you speak to, when you're trying to engage a large bank, they don't have blockchain expertise in-house, for example, so there's no way they're going to buy a solution that they don't understand, So these are the kind of issues. Then you have customer journey issues, is a gaming company may spend, 400 euros to attract a punter onto their site, so they get very, very nervous about, taking them out to a third-party app and, hoping that they come back again. Obviously they do, but there's a lot of reticence around that space. So these are the kind of issues that we're kind of grappling with. And then on a national, we also work with a number of governments, we're locally as well, and there are really interesting things, from a self-sovereign ID at the national ID level bring. It's many governments, including the government over here, are now working on government digital strategies, and the core of any such strategy has to be identity. Another big issue we have is, for example, locally, is corresponding banking issues. So many small territories and small islands, they're losing the corresponding banking relationships, and that's mainly because a big US bank, providing a dollar correspondent facility, can be hit by such a large fine, for a very, very little reward. I think a stat I read once was that for the amount of business they make in, say, somewhere like Malta over a year, they make in London in an hour, So it's like, why take that risk? And one of the biggest issues they cite is that, well, listen, we don't trust the KYC solutions, we don't trust the due diligence solutions being used by banks in certain territories, so they welcome, credible systems with a big brand behind it, like a MasterCard. And then more topically, you have health projects, such as the immunity passport, if this thing ever takes off, so there's lots of talk, there's lots of mistrust of whether these tests work or not work, but the idea is simple, in terms that, once you get your immunity certificate, you put it on your identity app, and you can instantly, go to a hotel, you can get on a flight and what have you. So, and then as a last example over there, I have, responsible gaming is now asking for more and more things, like apart from source of wealth, source of funds, also wants to have proof of affordability. And these are kind of things we're adding on to the application as well. So when somebody turns up at a gaming site, not only do they give the KYC information, but they can also show, how much they earn on a day, week, annual basis, so when they try to make a bet of, say, 5,000 or 10,000, they can easily prove both the source of those funds, and also that they can afford to make that transaction. So this is the first part of the presentation, so to speak. We're really focused on what we think is our in this space the most advanced part of RegTech, blockchain solutions and the kind of issues we have around it. We're kind of getting there. We've probably got about 10,000, I think just over 10,000 users now, and it's active in a few sectors, the FX space, some gaming operators, some little financial institutions. So it's taking off. But we're working very closely with governments and like I said, some large schemes, to try and accelerate that. So in the second part, we're going to move to the second part of the presentation, which is more around, the complete opposite end of the spectrum, and where...
Got 1 minute, Damien.
Have I only got 20 minutes I had? Jesus,
yep.
Really? Oh, time flies, sorry. Sorry. Okay, so I'll fly through. So we do a lot of merchant due diligence, and, we do what you'd expect us to do. We're plugged into hundreds of data sources, and we have a team, and we have all our in-house technology, and we work with a large acquiring bank, and we will identify within 4 hours all the shareholders, directors, UBOs, do all the KYC, do the AML check, sanctions, adverse media, PEPs, and sanctions, both on a you know, onboarding and also an ongoing process as well. So we have all the, my point is we have all these systems in place. We've built them up over the years, and we, you know, we probably you know, process for some of the largest acquirers in Europe. And the pain points we still have, you know, on the operation regulation, and this is what we really focus on. So RegTech is fantastic, and there's very, very good providers of RegTech out there. But where we see they all fail, including ourselves at this time, and this is what we're focusing on, is things like, you know, collection of documents. Clients don't send the documents in, you know, and they don't understand the processes, and they don't understand as you go from one territory to the other. You know, we're working with a UK bank, they want this. You then go to a German bank, they want something completely different. You know, and it creates a mistrust and a bad customer journey. You know, people not responding to you know, requests for information. So we have, so since I have little time, you know, and then things like, you know, basic stuff, but it's very time consuming. You know, if you run your PEP check, you know, and we work with a lot for European clients that have an Asian customer base. You know, you run your PEP check on you know, on a Chinese customer or Arabic customer. It's a very common name. You're going to get 200 false positive matches, you know, and most providers just dump those 200 matches on the client's laps. You know, we work through them. We have a team of people, and we work through all those. We work through all those matches, try to reduce it to zero, or as close to zero as possible. And this is where we find. So what we do is we have a lot of manual people that you know, that fill those gaps, and we constantly. And this is where our investment in RegTech is now. You know, it's trying to reduce these the manual intervention. You know, doing more and more automation, much possible, a bit of AI. You know, so this is since I have little time left, this is kind of where we are, and these are the last bits of RegTech. There's always new things, you know, we have new regulations to worry about, but there's always new things to worry about. But all things being equal, you know, what we're trying to do is really working very, very hard, you know, to try and reduce the manual intervention. So I'll stop there. You know, hopefully I've given something interesting in you know, showing both sides of the RegTech spectrum, so to speak, and you know, I look forward to the conference, and thank you very much for your time.
Thank you. And as I say, anyone that wants to ask him questions or send Damien requests, you can do it on the chat, you can do it on the question section, and Damien will definitely reply to you. So thanks very much for that, Damien. I think it's a great solution. Is it still too early for people to adopt it? We will only find out over time. I think you are a great first runner in these areas, and it's a solution that is needed. So hopefully we can get on stage now, Harry and Francis. Marta, are you going to push that? Fantastic. And Harry, I've known for quite a while now on these events. He's a great ambassador for QUBE as well. And he's going to have a fireside chat with Francis Gross. Now, Francis Gross is a senior advisor at the European Central Bank, and they're going to have a chat on the whole area of, obviously, RegTech, business performance and sustainability. So without more ado, because Damien did eat a little bit into your time, I'm going to pass you straight over. I'm going to go on mute now, and thank you very much.
Hello.
Thank you, Robert. Hello. Hi, Francis.
Hi,
yes,
Harry.
I can hear you fine. Hi.
Oh, I can't hear you now.
Can you hear me? Yes? Okay.
Okay.
All right. Excellent. So.
No sound.
Okay. Okay. What about now?
Yes.
Okay. Excellent. So technology again. Thank you, QUBE. Thanks for a great event, a great agenda, and such a powerful topic of RegTech today. It's been a pleasure, and we're all very grateful to have here today with us Francis Gross, a senior advisor to the European Central Bank, and Francis, thanks for joining us. Francis, just, I mean, if I may do a short introduction for Francis, is an engineer Francis, an engineer working in the financial industry, so such a great mix, I think. And with this rapid technology change and digital transformation, I think this is what we need. We need the skills to help catch up, to help speed up, to help stay in control, and RegTech is indeed a big trend now, a great and big powerful buzzword that we keep hearing. For some of us, it may mean one thing. For somebody else, it may mean something else. I mean, if I speak from the let's say banking industry or digital payments, it could mean from automating KYC or automating compliance in regards to AML, or automating risk assessments in monitoring compliance, or but Francis, how do you see RegTech? I mean, can we in a sort of speak define regulatory technology, and how can the audience envision of what are we talking about today?
Yeah, RegTech is actually the response to tech. We have a financial system that is now very tech intensive, that's going technically global. Anyone can correspond with anyone else, do transactions in the world. Billions of people with smartphones, etc. So things can now happen globally in no time. Shocks can propagate at high speed. And I like to use the analogy of you going into a boxing ring with a blindfold, and you're told every 10 seconds where the opponent was 10 seconds ago. You imagine what fight you're going to have. So if I take it simply as an engineer, not looking at political, technical feasibility at the moment, well, we need to be able to measure what's going on in the system at the speed at which it happens and at the relevant scale, which is global real time. That's a goal that's a bit long away, but it already tells us a bit about the specifications. We need to have data coming straight from the operational systems, fully automated, that are combined, automated into the kind of images, statistics we need, and also, for instance, having kind of bots that run through the markets and look for configurations that are considered risky.
Okay, so what are some of the examples that we've seen so far? I mean, how does what is out there already into this? I mean, is regulatory technology being used today, or how does ECB look at it now?
Okay, I mean, it's a big experiment, but there are already significant steps taken. If you see, for instance, the historic move after the last crisis to collecting granular data, EMIR, collection of data on each derivative transaction, MiFID II, that collects data on every transaction on a regulated market, granular. Anacredit at the ECB that collects data on dozens of millions of loans across the European Union. And that data is collected still in templates, it's still disconnected from the operational data, but it is a first step. We are building up gigantic data systems. Those data systems must talk to each other more easily, which they don't do today. So we need to progress a lot more on standardization. And to give you an example of what's happening at the end of the road, the FCA in Britain and the Bank of England have conducted an experiment with industry, including one bank, where they built a chain integrated from the regulatory text to the machine that interprets the data needs to fulfill that regulatory obligation, and that automatically goes into the systems of the bank to pick up the data and extract it for the regulator in real time. And the gist is, well, you change the text in the regulation and it picks up different data to suit the change in the text. So that is still a little bit of science fiction in the sense that, yes, it works, but everything will need to change in the industry to make that basically mainstream.
So it's obvious then, I mean, automating or digitalizing regulation, we have to deal with metadata. So if I understood correctly, so a key point here is that we need to be able to handle this data and we'll be able to bring data together and be manageable, be automated. So what are the plans of ECB? I mean, how if we look at into more details?
Well, here the ECB can't solve it by itself. Like there's no actor in the world who can solve it by themselves. We all need to work together for this. There are two main points. First, we need to come to a point where in industry systems can talk to each other safely without breaks, without data crashing. And that is a tall order. We will need to be very disciplined in the way we create data. I mean, today everyone is used still as traditionally to put their own data their own way into their computer. Data is languageable down into some kind of things, yeah. But that data is separated from you, goes into the system, and the systems don't know who put the data in, and they put data from millions of people together. So we will need to progress on standardization. And
standardization. I mean, of course, but for the audience, when we speak about data that ECB wants to control, how can we define data in this case, or are we talking about different types of services or specific financial products, or what sort of data?
Well, we need to take this very general, looking at the system where everything can propagate, a shock can propagate through all sectors, real sector, financial sector, all markets across the sector. I mean, the last crisis has shown what happened. It started from one limited market and it propagated through the world. So this is an ocean of a problem, and we need to find a starting point. Yeah, and the starting point will be, well, Damien talked about identity before. It is about digital representation of the identity of the elements in that system that are factual. And that is parties and contracts for a start.
Okay, so one thing is the identity, and one thing could be regulating or data could be the transactions that those identities perform, if we look at it from an AML perspective. Or you mentioned also contracts. What do you mean by contracts?
Well, every share, every loan contract, I mean, the whole, say when you want to measure a substance, you need to understand how that substance works. So you need to have a clear concept of it. And the concept, I mean, I have come to, it's now accepted widely, of the substance of the economy is that it's a web of contracts, a network of contracts that connect a global population of parties, which are humans and legal entities. Every relationship in an economy happens through a contract, informal economy, whereby transactions are defined as the creation of a contract, an execution step in a contract, say a payment, or a change to contract terms, which you could also say is a new contract. Now, when you have that vision, it's a graph. In a graph, you start by identifying all nodes, all edges. So you put an unequivocal identifier on every node, every edge, and you make sure that that's easy to use and cheap to use, free of charge, and then everyone will sooner or later come to use it. And that is how we can drive standardization into the markets, but that must happen also by law. A concrete example, I started 16 years ago, is the legal entity identifier, LEI.
Okay, all right.
Reports, knows that. And that's the first step. It's basically a number plate you put on every legal entity.
Okay,
And regulation.
Yeah, so, I mean, talking about the number plate and your history and background coming from the automotive industry, but then working in organizational planning statistics. So, I mean, it's a nice comparison. So if I understand correctly, we want to start first digitalizing and registering each entity, right, into a common system, yeah? So, but what about looking at each member state, if we're looking in Europe only, or as a global system? How do we bring all this together and registering into one system? I mean, are we talking about one single data infrastructure, or?
Yes. Interesting question, but it's an essential one. So the system exists. It's the Global Legal Entity Identifier System, or Global LEI system. It has been established in 2012 on the basis of a charter that was endorsed by the G20. So G20 heads of state endorsed the charter. So the system has been created. Meanwhile, it is operating in the whole world. So 200 plus countries have the possibilities to issue LEIs. Now, the next stage will be that sovereigns mandate the use of the LEI through law. What is happening today concretely is that regulators mandate it for their own data collection. So EMIR, the European directive, says every party to a derivative transaction subject to reporting must have an LEI. MiFID II says even more strongly, no LEI, no trade. So for trading on a regulated market in the EU, you need to be registered in the LEI system. And there are around 50 such regulations. Okay. That doesn't make the LEI useful for industry because some of your clients will have an LEI and many others will not. Now, to make the LEI universal, we need two things. We need law that says if you are a legal entity, you must have an LEI. And to make that feasible practically, we also need the LEI to move to a zero-cost business model, which we are working on at the moment.
Okay, so we need to expand this policy into other areas or other sectors. I mean, would this be covering only the financial services industry? I mean, are we talking about just regulating those dealing with banks, or shouldn't this be applied on everything and all the commercial aspects that we do?
I see you have thought about the subject, Harry. Well, you have a passport, whether you are a plumber or a banker. And all the same, LEI should be an identifier for every entity independent of its use. The perception at the moment, though, is that the LEI is an identifier for the financial sector. Why? Because it is mandated for financial reporting only at the moment. Okay. So that is where that perception comes from. But when you think a minute or longer, as you did, you easily come to the conclusion, yes, everyone needs to have it. It needs to be universal. Yeah.
Yeah. So so we should expect new policy. I mean, trying to cover other areas. Do you think that member states or the public will be acceptable to this? I mean, considering, I don't know, the challenges we had with GDPR, although we're talking about legal entities here. However, I mean, would all the regulators or the public be willing to use this system, or what do you think of that?
Yeah, okay, there are two sides. There's the public, and there are the leaders of the public sector institutions. Well, three sides, and the businesses. For the business, it will be, I mean, they easily accept it, but it should be free and accurate in real time, not verified once a year. So that is simple quality. And we're working on a business model that would lead to that in a nutshell would connect the official sources of identity, where your identity as a legal entity is created, which is a business register or a court, depending on the national law and the type of legal form you have. That would kind of push data directly into the LEI system. And if you want to change the name of the company, you have a new name the moment the data is registered and pushed into the LEI system, and then the LEI system is accurate in real time. That's very easy to do and very cheap to do. For the public sector, I think we have a cultural barrier. Many people, and that's very important, many people in the public sector are not yet...
Francis,
Sorry.
I think we're losing. Okay. Sorry, I thought you froze for a sec. I don't know if
can you hear me?
Yeah, I can hear you now. Okay.
Yeah. So many in the in the official sector, in the regulatory world, scientific education, get it, but not everyone yet. So there is still this technology neutrality dogma in regulation. But when the world you regulate is made up of technology, and when all the properties that can make that system dangerous come from technology, you can't afford to be technology neutral anymore. It all amounts at the end of the day to be technology ignorant. And that's where we need to change in mindset. But that's progressing. And then GDPR. Well, at the moment, that's exactly why we at the moment work on legal entities only. Of course, if you think in the abstract, one day we will have to cover people as well. But you and I, we have between us probably a couple of dozen identifiers.
Yes. So but can we say though it's a similar approach of what we are seeing with e-signatures or electronic IDs? I mean, is it?
Well, yes, I thought about that when I heard Damien speak before.
Okay.
There is no competition between those two concepts. It's very simple, actually. The official identity is created by the sovereign, on behalf of the sovereign, under law. And the kind of devices that are offered by Damien, they should actually be a kind of a digital representation of that identity. So you take the LEI of a human, and you attach the rest of your data to it in a way that is certifiable. That's
okay.
Then you're connected to the official identity. No,
Robert, are we good on time?
We're 1 minute.
We're 1 minute. We're a minute. So to wrap up, Francis, I mean, this sounds like a fascinating, but also a huge project. I mean, how fast is this going to be rolling out? I mean, when can we expect some results? I mean, is it? Yeah. It sounds like a big change, and is it? I mean, is it going to bring us in control, or what should we expect?
I think it better should. It's not going fast enough. I started the initiative when I joined statistics and realized what, I don't say the word now, 4 letters, data is. So it took, say, 14 years to come to that point. I think it's accelerating. I hope it will be fast enough before something happens, because technology is piling on layer after layer. I mean, we have 5G coming up that will make the networks 1,000 times faster. Yeah. AI, ML generalizing, and a few years down the road, we'll have quantum computers. Already now, no one understands what happens when there is a flash crash. So I think there will be a lot of opportunity for just mishaps and accidents, technogenous risk, and also for crime. As long as we don't watch, there will be people helping themselves. So we should accelerate. And final word for me, I think it's very important that the industry, the tech-savvy people in industry who have a conscience, go and push the regulators to be proactive.
Yes, so we need a lot of collaboration. Yes, we need a lot of collaboration to bring such a homogeneous system into place. I mean, I don't know if we should call it a system, because maybe we're talking about massive supercomputers, like a huge network. Yeah,
I think we will need to create a measurement instrument that will be a global system, made perhaps of many systems, that will serve all businesses and regulators at the same time. We need to build artificial sensors that allow us to see that system at the speed and scale it works.
Can we rely fully on this system, or can we rely fully on, I mean, the technology, and I mean, to do this without any, human intervention?
I think well, that's a great question. We will need to build it so that we can rely on it, and I think there will be here again, probably some failures on the way, but anyway, I don't worry too much. It starts from a small germ. So the LEI is a germ around which things will crystallize. And as we go, I don't worry. It progresses so slowly that we will have time to learn and to adjust. But we will have to do it with an open mind. And
excellent. We also have one question. Yeah, okay. Just one question from the audience, if I can take this, Robert. So since LEI is self-reported and self-submitted, and while admittedly it is peer-reviewed, one still needs to check the info though. Is that right?
No, the LEI is always verified against an official source of identity. And in the new business model we're developing now, it is that official source that will put the data straight into the LEI system. So the business register will put the data straight into the LEI system. So instead of having just a paper that says who you are, you will have LEI data coming straight from the same source. Yeah.
All right, excellent. Thank you, Francis.
Thank you, Harry. I really enjoyed this. Nice event.
Excellent.
Thanks, Harry. I'll catch you later. And thanks, Francis. Because it's a webinar and there are no breaks, we have difficulty catching up time. So that's why I'm a little bit strict on the speakers, I'm afraid. That's just the way it goes. So I'm going to get straight into Angelique now, one of the great sponsors of today's event from Cedar Rose. Cedar Rose is business intelligence you can trust. That is their logo, and certainly we're looking forward to hearing from Angelique. I'm going to pass you straight over because I don't want to waste any of your time.
Hi everyone. Hi Robert, thank you. It is my pleasure to be representing Cedar Rose here today. And we are very pleased to be one of QUBE Events sponsor. So in case you haven't heard, I'm gonna start my presentation with a very important news which was shared last week. France's highest administrative authority on Friday dismissed a challenge by Google against a fine of 50 million euros for failing to provide adequate information on its data consent policies and not making it clear enough to Android users how it processes their personal information. So the fine was imposed in 2019 by France's data watchdog, the CNIL. Google then appealed, but on Friday, the Council of State confirmed the CNIL ruling. It agreed the information that Google provided the users does not meet the requirements of clarity and accessibility required by the GDPR, even when the nature and volume of data collected was particularly intrusive. This is a very big example of the consequences of non-compliance. Companies must adhere to a set of overriding rules, procedures, and protocols when conducting business. Compliance plays an essential role in helping to preserve the integrity and reputation and business mitigating operational risk. A robust set of standards and ethical practices generate increased visibility and confidence, significant for investment and sound decision-making. So to keep up with changing regulations, technology evidently has a key role to play in compliance and how organizations can successfully and positively automate their KYB, KYC, and digital procedures. So with trade and business operations expanding globally, the risks become greater, and so do the fallouts of non-compliance with anti-money laundering laws and breaches of financial sanctions. Disciplinary fines, huge penalties, legal criminal proceedings, and imprisonment cause harm to reputation and stakeholder confidence. Governing bodies across the globe have attempted to curb corporate non-compliance by enforcing a set of rules, regulations, and protocols that companies must meet. Although we all know that the rules may vary on the jurisdiction, they share similarities and the common goal to enforce compliance and to safeguard from fraud and criminal activities. So at Cedar Rose, we comply with and implement effective rules, regulations, and standards to provide a safe experience for our end users. So here in this slide, you can see some risks and consequences of non-compliance. We have penalties and fines, reputational damage, access to markets and product delays, regulated out of business. I'm going to share with you today also another fact. We have 58 AML penalties handed down globally in 2019, totaling 8.14 billion USD, with the USA and UK leading the charge. This is double the amount and nearly double the value of penalties handed out in 2018, when 29 fines of 4.27 billion were imposed. So as you can see that financial crime compliance has come a long way, but some statistics show there is still a lot that companies need to do to make sure they are fully compliant when doing business. So since our webinar today is about RegTech, so how can RegTech be used? The regulatory technology plays a big role in making regulatory compliance more efficient and effective. There are different ways that RegTech can be used to help business be compliant, mainly in banking and financial sectors. So including, one of these ways is identity management and control, which is facilitating counterparty due diligence and know your customer procedures, anti-money laundering, and anti-fraud screening and detection. How can Cedar Rose help here? So in order for businesses and individuals to comply with certain regulations, Cedar Rose have developed a variety of risk management solutions that can help companies ensure compliance and minimize risk of doing business with entities involved in criminal activities. So our recommended solutions are as follows. We recommend to use the Know Your Business. We offer a verification service that helps clients identify and verify the legitimacy of companies from the Middle East and North Africa region to make sure you know whom you are doing business with. We also recommend Know Your Customer. KYC helps companies to onboard customers in a compliant and seamless manner. Another recommended service is company due diligence. Only go into business with legitimate and compliant entities. Our company due diligence solutions will help you avoid doing business with entities with connection to fraudulent activities. Last but not least, customer due diligence. So keep your company reputation clean and compliant. Determine who your clients are connected to with political exposed persons, PEP screening, UBO discovery, and so much more. I included in my next slide some regulations. The General Data Protection Regulation, GDPR. So to stay compliant, data protection policies and data management procedures are meticulously enforced. The second regulation is anti-money laundering. We fully comply with AML policies in all areas of business and with our strict customer and supplier onboarding measures. Users are verified at the point of registration to stamp out fraudulent activities. Third, Know Your Customer or Know Your Business. CEDAR's KYC and KYB services protect from fraud and losses resulting from illegal funds and transactions. Anti-Bribery Act, we understand that some regulations such as GDPR are region-specific. So therefore, we also comply with international laws such as Anti-Bribery Act and the FCPA below. Both legislations criminalize the bribery of foreign public officials, require business accounting transparency, and promote cooperation in the international investigation and enforcement of anti-bribery laws. And the last regulation included in my slide is the Foreign Corrupt Practices Act, FCPA. By complying with an array of regulations across all regions, such as FCPA, we want to help our clients feel confident in engaging CEDAROS for their due diligence investigations. We implement what we recommend, and that is compliance. So who we are? We are established in 1997. We offer risk management solutions globally. We are specialized in the Middle East and North Africa region. Offices we have in Lebanon, Cyprus, and UAE. We are known for quality and reliable business credit reports and due diligence investigations. We hold the only source of electronic identity verification for Middle East. So we work hard to ensure data from this region is available to our customers, to rely on us to make decisions 24/7. Having access to accurate data on individuals and businesses in the region is vital to protect our clients' reputation, mitigate risks, and ensure they are trading compliantly in accordance with the global regulations, and to help them avoid the risk of non-payments. I'm gonna go quickly into some of our recent awards, and it is worth noting that we are once again finalists for the Credit Excellence Awards for this year. Wish us luck, because tonight is we will know if we are to be the winners. So here are some insights about our coverage. CEDAROS is a 23-year-old company. Today, we offer a unique access to over 107 million companies and 160 million individuals for instant KYC and KYB in real time. We have expanded our coverage globally for 230 plus countries for credit reporting. As for due diligence, we have recently added Russia and the STAN countries to our MENA, Turkey, and India resources. We are quickly becoming the go-to source for instant business intelligence, risk rating, and verification on any company, director, or shareholder in the world, with full link analysis. CEDAROS offers the service through a single flexible API, and we are also undisputedly the go-to source for MENA region. For KYC, we have more than 23 million records, and UBO data, also we have more than 6 million records. a region known for not being transparent, digital, or even centralized. We will also, some of our future plans, we will integrate through our API another 20 million companies for the APAC countries. And by end of 2020, we expect to have China integrated, bringing another 15 million active companies to our KYB service. And to further complement our KYC and KYB service, we will be launching instant global sanctions list, PEP, and state-owned enterprise screening, SOE, on both natural persons and legal entities, all via API. Here are some of our risk management solutions. It includes the business credit reports, due diligence investigations, identity verification, MENA database subscription, which is the world's largest MENA database of companies, directors, and shareholders, with identifiers such as LEI numbers for companies. As Francis already highlighted, this is a very important identifier for the companies. Okay, what are our due diligence what do our due diligence investigations offer? They prevent connections to money laundering, political exposed person, terrorist financing, illegal arms trading, child labor, corruptions and bribery, and also this beneficiary owner, UBO of an entity, and avoid harmful risks that can seriously damage your business. Also, what differentiates our due diligence is that we have multilingual researchers. We have network of local contacts across the Middle East. Our investigations are global. We provide comprehensive, tailor-made investigations, and we are trusted by auditors, banks, governments, investors, journalists, and more. And most importantly, we have boots on the ground. In regards to our electronic ID verification, EIDV, you can access our database instantly via API. We maintain records on over 160 million individuals and 12 million companies. We offer the foremost electronic ID verification service for the Middle East, Romania, and Russia. And our quality data is extracted from official, local, and publicly available sources, as well as credit rating agencies. So we provide also instant results, either match or no match. And our service is extremely valuable for KYB and KYC purposes. Our long-term strategy is not only to be the MENA data gateway for KYC and KYB, but to become the go-to people for clients onboarding and compliance. And thank you for your time. Please, if you have any question, do not hesitate to use the question section or the chat section, and I will try my best to answer you.
Brilliant job there, Angelique. You've got us back on time as well.
Thank you. 20 minutes.
Phenomenal. I mean, I think clearly you've got a lot of history and background in this space, and you've developed your systems over time, both the physical systems and more recently, presumably, in the sort of whole space of the digital technology and the sort of growing ways in which you can use other technologies to develop those systems. I can't see that we've actually got any specific questions, but with the timing as it is, I think that is pretty good. I'm just checking my clock. We've still got a minute left. So, and Angelique, I mean, what do you see as the future in this space? Perhaps you can give us a thought of where things are going in the next few years. And no point 10 years, but maybe 2-3 years. What's going to happen?
Yeah, I do believe that companies like Cedar Rose and other companies providing data and having like everything that can help companies in to be more compliant in regards to regulatory technology. So and also I do believe that like having the LEI system will definitely help us have a more an easier and clearer know your business, because it will give you all the UBO and all the details that can help you identify that this company is a legal company. It is very crucial to know which company you are having business with, especially in terms of, I don't know, you need to know the group structure behind the company, who owns the company, who owns the owner, like the UBO of this company. So the investigation is very important in order to be and to stay compliant. So yeah.
Okay, that's great. I mean, I've seen a few comments saying great presentation, Angelique, well done. So certainly the audience will enjoy it.
Thank you.
Thank you very much. And we're moving on to the panel session. Thank you. So now I have a very interesting panel session coming up, and the growing need for RegTech in light of coronavirus. And I've had a few panels with some of these guys before, so we all know each other. I think they'll all be inviting up. We've got Massimo from the United Nations, who always gives us a great insight into the whole area of blockchain and how that's coming through in this space. Then we've got Luca from the Maltese Financial Services Authority. So we know the MFA has been very strong in a lot of the areas of digital solutions and digital currencies. So I'm pleased to hear what they're doing in that space. Then we've got David from Fidelity, who gives us a great insight into the wider world of financial services and how RegTech's coming into that space. And finally, but certainly not least, and I gave a little shout out earlier to checkout.com. We've got Matt from checkout.com resting on his laurels after the latest valuation, but still working 24/7, I'm sure, to make sure that business runs well. I'll just ask the guys to just give a quick 1-minute intro before we kick off with some questions on this section. So maybe Massimo, you kick off.
Okay, I'm Massimo Bonomo, United Nations Global Expert in blockchain, crypto, fintech, RegTech, and the other blockchain applications. I've been looking at very recently about two main issues, which is one, blockchain applications to COVID-19 challenges, and another one is central bank digital currencies, and also regulations in the crypto space.
Thank you. Luke from MFA.
And I want to thank all the panelists for joining me here today, and QUBE for organizing this event. It's been very insightful, and I'm glad to be part of it, especially from the regulator side. A quick note on me personally: I've been working for the past year for the MFSA in realizing the MFSA fintech strategy, which among its closer initiatives that are due to come realization is the Sandbox Regulatory Sandbox Initiative and the Innovation Hub Initiative. And we'll be talking more about these as they are very related to what we're talking about today on RegTech.
Thank you very much. David, Fidelity.
Sure, David Cowland, Fidelity International. I've been at Fidelity 10 years now. I spent most of my career in technology, delivering applications to the various business teams, but now working for compliance, looking to transform compliance for 2030. Different way of doing things, different way of working. So looking to bring far more technical influence into the compliance space. And I head up Fidelity's RegTech initiative, or just really sort of like, you know, I'm the main lead for pushing RegTech within Fidelity and without.
That's great. I mean, perfect for this panel. And finally, but not least, Matt.
Robert, hi, morning everyone. My name is Matthew Cannon. I'm with checkout.com. So like Robert said, we've just recently been in the media this week. We finalized our Series B investment round, so that values us now at a little over 5 billion, which is very exciting news for us. So we're a payments fintech based in London, 700 people. I'm based also in London normally when the pandemic is not around, and I look after compliance globally, so AML, sanctions, bribery, corruption, those type of risks.
So a great user of RegTech.
yeah, absolutely.
So maybe if we could kick off, I mean, maybe it'd be good to start with you, David, being probably the person right in the middle of RegTech most of the time. Perhaps you could give us a bit of insight on this growing need for RegTech and how that's perhaps expanded even when we've had a lockdown situation.
Sure. I think, the global crisis has put a lot of extreme pressure on compliance teams, especially monitoring teams. The volatility in the market has seen sort of messages or, the ability to oversee trades. The systems that we have in place have gone berserk. People have seen anywhere 2 to 3 times the volume that they would normally see. And of course, we need to monitor communications. And as a result, teams are having to adjust to the way that they do this by the fact that most of them are working from home. Thankfully, we have really good tech. We've been able to work from home quite adequately. But I think the key thing is the regulators are becoming more concerned by how, now that we're starting to come out of the crisis, they're starting to look at where regulated individuals are working and how we are monitoring those individuals. And there's a sense from the regulators that the need to monitor unacceptable behaviour, and that firms will do the right thing no matter where business is being conducted. So as we move into this new world, there's a sense that compliance has tended to rely on spreadsheets. We're kind of moving into the space now where we've got applications rather than spreadsheets. But now we're sort of wondering how we're going to be able to connect some of those applications. And I think what we're seeing is people realizing that they're having to work with their team members across the globe, logging into multiple applications, sometimes up to 7 in a sort of like a compliance monitoring space. And RegTech is really sort of coming together to sort of bring all that together and help stitch it all together so you get that holistic view across all of the monitoring space.
And are you finding you're having to build that yourself at Fidelity, or are you finding there are some third-party vendors out there that are spotting this hole in the market and creating solutions?
No, we're taking, well, RegTech is kind of a blended approach of build and buy. So we have a cloud-first strategy. So we want to take something out of the box. We want to use it vanilla. We do not want to be building it and trying to maintain it. But where you have specific use cases, so in the asset, we produce our own products, so we have a need to monitor pilot funding. And that's not necessarily out of the box in a lot of solutions. We're having to build that ourselves and then work with our RegTech companies for them to sort of like build that into their product. So it's kind of that 80-20 rule. Buy where it is off the shelf, and then build alongside where the 20% is not catered for.
And Matt, you're obviously in compliance globally on checkout. Are you finding there's some good vendors in this space, or are you building your own?
Yeah, absolutely. It's a really good question. And we've gone out and we've looked at the market. We looked at a range of different RegTech providers, and to be honest, I think it'll be quite difficult to do it in-house. I mean, the quality of some of the vendors that we've seen out there and the products that they're delivering are fantastic. And they've been tested. They have excellent functionality that really allows us to delve down into the key kind of source of the issue. And we're working with a couple of different vendors at the moment to implement those into our particularly our monitoring and screening solution.
I was going to say,
we're also looking at
what are the particular solutions you're finding that there are good vendors out there for?
Yeah, so sanction screening is one. I used to work at Standard Chartered Bank, and looking at making sure each of the payments and the directors and the people involved are being screened against a list. That's something that's relatively mature. There's a lot of vendors around, but there are some ones that are coming through right now that are, do a really interesting way and make sure that the false positives are reduced. And I think that's a big benefit, particularly when companies are growing, such as us and other companies as well.
And from a regulator point of view, Luke, are you finding that you're now it is coming out of lockdown that you're starting to take more of a look on how this compliance is being carried out by people working not in normally obviously they work in their offices with all the tech around them and lots of monitoring going on, but working from home, I think we heard from gosh, David, that you could actually logging through 7 different systems just to get online to do your transaction. Are you looking at that as a regulator?
Well, as a regulator, we found that COVID-19 has only emphasized certain points for us that were important even before COVID-19 happened. And most have been already addressed through our technology strategy and our fintech strategy, whereby we see the need, rising need for us to become a data-driven regulator at the end of the day, and to have the right tools that are going to enable our analysts and people who are doing the supervisory and enforcement part to actually be able to do their job more efficiently. And for example, in the crypto sphere, we are using currently algorithm-based solution, which helps us trace all the wallets, transactions by geographical characteristics. And as far as I've heard from our analysts that are dealing with virtual financial assets, such a tool is giving value add to their work as analysts on these projects.
So you're actually as a regulator helping the industry. You're creating solutions.
We're not creating solutions, but we are actively taking on solutions that we see fit our criteria for what we have envisaged for the regulator to be in the future. And those type of solutions are definitely going to come more into play once we launch our regulatory sandbox, where we see a lot of these stakeholders coming into us with their solutions and potentially testing them out within this environment.
And what is the regulatory sandbox offering in Malta?
The regulatory sandbox offering in Malta is very similar to what other NCAs are doing, but for us, it's very important for us to have this sort of initiative where we can showcase that we are open to not stifling innovation, but actually to support it, to move forward and to see these type of solutions firsthand and identify all the potential regulatory gaps and challenges that arise from such solutions, and to help guide these startups or incumbents who are coming with these solutions to authorization and how to test these solutions in the market.
So the sandbox actually provides that sort of stepping stone for the startups, and you try and create a seamless solution for them.
Exactly. I mean, not to create a solution for them, but to be part of their solution that they want to bring to the market. And through that process, we'll definitely be sharing the knowledge both from the regulatory side and the side of the industry, where they need to come in and tell us what their solution is all about, to actually teach us how it works and what it entails, so that we may tailor sort of a regulatory response to any inherent gaps that these solutions might propose in the future.
And I mean, as we're talking to you in Malta and the MFA, the thing Malta hit the news for was it was working very closely with sort of virtual assets in their virtual financial assets framework, and this was quite revolutionary in the world, let alone Europe, because you're very proactive in that space. And during this COVID time, we've seen a sort of a push into that whole virtual asset space a bit more. And I'll go on to Massimo in a minute on that, but can you talk a little bit about what Malta's done in that space as well?
Well, out of all the letters of intent received, some of them are in the advanced stages of being reviewed, and it's a continuous process for us, especially as you said, it's something that's been novel on the global stage and in the EU stage coming from us. So we take great care about processing these applications so that we can upkeep the highest standards, and we know that entities coming out with those licenses for virtual financial assets will be up to the highest standards, and all the risks have been accounted for prior to their licensing. And
so Malta is a good place to, I mean, it would be a very regulated place, but it would be a good place for good businesses to go in that.
Definitely, that's what we want to showcase. I know that there are some comments being made on that our frameworks are a bit onerous, but our point is that we want to create a secure environment while keeping markets and the consumers in our mind to safeguard them. So for us, it's about attracting the right kind of entities and the right kind of investors that provide these solutions to the market.
So Massimo, it's a good segue into speaking with you at the UN. You can see Malta is trying to be up there, taking a leading route in the sort of regulation and the certification of these organizations that are bringing new virtual assets in. What do you see happening in that whole space at the moment, and how are you working with the UN on that?
Well, what I've been looking at is regulations mainly all across the world, and in fact, regulation in the European Union quite strict. As you see, for instance, EU Fifth Anti-Money Laundering Directive, AMLD5, went into effect on June 18. But among its aims is to, of course, to counter terrorism funding through money laundering. And the aim is to establish a centralized and public register of companies and their ultimate beneficial owners. Why? Yep. Because, of course, you want to eliminate shell companies that exist solely on paper to transform the profits of crimes into seemingly authorized assets. That's a problem for regulators. And regulators are focusing on tracking digital currency and regulating it to eliminate anonymity. Even though in China they have this concept of controllable anonymity, which is an interesting concept. But regulators all across the world have different differences in implementation on that. And also, if you look, for instance, at what's happening in the United States, that's quite interesting, because in the USA, in March 2020, the SEC proposed amendments to raise funds for blockchain companies. That's something new. And you have Regulation A+, and the amendments were intended to offer an exemption for small issuances, providing startups and small firms an easy way to raise funds from investors. So you have two-tier framework for regulators' offerings. Under Tier 1, you have issuers that may offer and sell up to 20 million of securities over a 12-month period. And the Tier 2 issuers may offer up to 50 million of securities over a 12-month period. So you tend to find two situations in which you would believe that regulators in the US are in favor of blockchain and crypto assets, but by the same token, you have a SEC cracking down on some stable coins. In fact, in April 2020, the New York Litigation Office has filed 11 lawsuits against Binance, BitMEX, Block One, and Tron, among others, a SEC alleged violation of security laws in the United States. The violation supposedly came back during the sale of TRX token by Binance, BitMEX, and others. So token issuers took advantage of the market's lack of understanding and awareness of how cryptocurrencies work and sold illegal securities to US citizens. And that's effectively the most important point, the lack of understanding of the general public that regulators try to address with specific rules and regulations. And you see what happened also in Germany recently has given us reasons to believe that the regulators must be stronger and faster to address these issues.
Yeah, no, I mean, as you say, there has been a clampdown in the US on crypto, and many prosecutions being made against exchanges who've been exchanging some tokens that they feel are security tokens, which makes them susceptible to the US securities rules. The other side of this that we've seen a lot happening in COVID is the growth of CBDCs. Could you just expand on that a bit before I move back around the group?
Sure. CBDCs are the next revolution in finance, I think. And I'll tell you why. I made some statements that made a great impact. Although, as a disclaimer, I speak in my own on my own purpose. Now, first of all, you have UK, given that the audience has got lots of UK citizens and banks. You have Bank of England that has been issued with a proposal for a blockchain operating system in response to consultation on CBDCs. So this is a particular solution that is being developed by L3COS. It's designed to use L3COS platform for the Bank of England to issue its own digital currency. Now, it will be in an electronic form of central bank money that could be used by households and businesses to make payments. And it's got 3-layer level that L3COS says that would make fraud, money laundering, and other black market financing impossible. So this is one solution that is being analyzed by the Bank of England. There are two models that I tend to emphasize because they are quite different. One is one-tier model, where you have digital money to be transferred directly from the central bank via the social security system to a single person. This is particularly important during this COVID-19 crisis because the social security system holds all the updated information of the people, or us. Because of COVID-19, the money transfers to be done in the United States, for instance, to the people who need most, unemployed people, could be done directly with digital currency transfers from the government via the social security systems to them. So direct payments via the blockchain allows the money to go fast to the people according to their updated information. And then you have the second model, the two-tier model, where digital money is to be transferred to the intermediaries, mostly banks, to a single person. This model is being adopted in China, proposed in the United States, and only the other countries. Banks are not so much in favor of the introduction of digital currency because they would suffer the most if the one-tier system is adopted in the longer term. However, the companies that are worst off because the introduction of digital currency will be the likes of Visa and MasterCard, because the processing of transactions in the future will not need credit cards, but only digital currency wallets. And I'll explain that. What is the impact of a central bank digital currency on consumers? In this current interest rate environment, the only advantage of having a bank account is that enables digital payments because of no interest remuneration. Now, many costs related to having a bank account, especially for having a single transaction done, are the other side, and there is a lower security because of breaches from hackers. And on top of that, fees to be paid for electronic transactions using credit cards. Now, the use of digital currency eliminates the need of a bank account because all you need is a digital wallet, which allows you to hold digital money. It makes you pay the bills using the mobile phone without using the credit card. There are no fees to be paid to credit card processing companies, Visa, MasterCard, SWIFT. No fees to be paid to banks for bank money transfers or holding a bank account. So you can see that in this environment, it's easier and it's even more convenient for citizens to hold a digital wallet, a central bank digital wallet. And finally, we come to the Digital Dollar Project, which is a partnership between the Digital Dollar Foundation and Accenture. And this is, again, a two-tier model where a digital dollar will be tokenized form of the US dollar. A digital dollar will operate alongside existing fiat currencies and commercial bank money. Again, a digital dollar will be distributed through the existing two-tier architecture of commercial banks and regulated intermediaries, and will not impact the Federal Reserve ability to affect monetary policy and control inflation. And the same model is being adopted and even sort of implemented right now in China.
Okay, well, that's. I mean, I think that's a bit scary for some of the people in the room here. Especially,
Yes.
well, what's that going to do to the checkout model, Matt? If you just do digital wallet, you don't need any acquirers anymore. The schemes are gone, the acquirers are gone, the banks have gone. What's left?
Well, I mean, I know that this might be scaring for most of the people in the business, but from an pure economic point of view, would you pay a bank to hold a bank account, and you have fees on the money that you own, and the fees on the payments that you make. When you can do it everything by a digital wallet held by central bank digital currency and paying nothing, I wouldn't. I'm sure that there are not real.
How are checkup.com bearing up? I mean, I can see that there is a utopian future there with the CBDCs, but I think there'll be at least a two-tier system for quite a while where everyone needs everything going together.
For sure, I'm sure that. But in fact, if you analyze, as I've done, the system, you can see that which country has been pushing and is more advanced in implementing that. China. Why? Because China has a very strong control on its banking system. So effectively, the central bank gives rules that are strictly followed by commercial banks, while US and Europe are more dragging the feet, slower in the implementation of central banks' digital currencies. Why? Because banks are stronger and have more independence in that respect, and therefore they are not willing to accept that right away. I'm sure that the compliance people would check on that very thoroughly.
Yeah, no, I think Massimo, I think, I mean, the context that you provide is so incredibly exciting for some, interesting for others. We are looking at the crypto side of things, and we look at it pretty regularly because it changes so often. There's so much benefit, I think, to society, the general financial services system, but obviously there are some issues there that need to be looked at closely. And I think you're right, exactly. I think we can improve the system, similar to what a lot of the fintechs are doing. But
also,
yeah.
If you let me say just one more thing. Crypto is one universe, central bank digital currencies are another universe, and then blockchain applications for digital money are another universe. You have to see the whole picture all together, because if you look at only one side, you're missing the other side. And that's what is exactly the most important thing that regulators are looking at, and that's why they're a little bit slow in this part of the
world. And that's a very, very good point. Absolutely spot on. Very good point. Yeah, and sometimes the language there makes it somewhat difficult than it needs to be, but no, very good point.
Yeah, and I think Luke Malta has been at the forefront of a lot of these moves in regulation in this space to try and generate a more workable format for digital currencies to come through.
No, definitely, and for our part, we try to remain active in.
Might have lost Luke. He seems to be frozen. David, can I get some feedback from you on that, perhaps?
Well, I'm no blockchain expert, and I mean, Fidelity is looking at it. We're running a couple of experiments. We look at it in the transaction side of things. And I think that's where a lot of financial services are looking at, where blockchain can offer probably the biggest sort of reduction in costs when you think of the transaction process, or the buying and selling process, and where it goes to. It's the same with corporate actions. I think corporate actions goes through 15 different intermediaries. And you kind of wonder why blockchain isn't there, kind of like dealing with it. I think the biggest thing I see, I mean, I absolutely agree with Massimo, and I think it'll have its time. I think at the moment it's still going round in terms of what is the killer app, what is the killer thing that's going to come out that's really going to do it. The government digital currency thing is very interesting. Probably take a whole conference on just that. But I think from a technology point of view, I think as quantum computing comes along,
yes, true, and that's another massive change.
Increases, that will change crypto and blockchain. I think until then, if you're looking to do something really big, like billions or trillions of transactions, you're going to have trouble storing a blockchain and actually working on it, right? The computing power is just not there yet. But Massimo's right. It's growing and growing and growing, and it makes commercial sense. It's just waiting for its time to really become mainstream and commoditized.
That's brilliant. Well, we've run out of time, I'm afraid, but I think it was a really thank you all for your contributions. Thank you, Massimo. Thank you, Luke. Thank you, David. And thank you, Matt.
Thank you, Rob.
And yeah, I look forward to seeing you all in real life soon. I'm moving swiftly forward now onto. It's called a challenger session, but I wouldn't really call this a challenger. I think we've got two very interesting speakers that I'm going to try and drag some information out of about this great rise in data privacy regulation. We've had some discussions earlier on in the day about data protection. We had a good talk by one of our promoters, Cedar Rose, on their ideas about what's going on there. We've got two great speakers here, and maybe I could get them to introduce themselves. So perhaps Samra, you'd like to go first and introduce yourself. Samra's come all the way from the US to do this, and that's the great thing about webinars. You can be anywhere in the world and you can present together.
Yes, hello. Thank you very much for having me over, and it's really a pleasure to be in this panel with both of you. My name is Samra Kazmi. I am the CEO and founder of a think tank called Women in Sustainable Innovation. Basically, what we do is provide support and elevate entrepreneurial ventures that focus on sustainability and innovation, really led by women, or in support of women's causes. I'm based out of New York City. I've had 25 years of experience on Wall Street and the last 5 in technology. And right now, I'm just sort of bringing the two of them together for social and communal good.
Thank you. And John from Promontory, which is a part of IBM, but perhaps you could explain a little bit about the history of that before we kick off.
So I'm John Asprey. I'm a director in the privacy practice in Promontory, based in the UK. And Promontory is an advisory consulting firm. I mean, we primarily focus on 2 areas. That would be privacy and data protection related consulting across all industries, and then also financial services compliance. So anything from financial crime, conduct and supervision, senior managers regime, you know, the whole gamut of financial services regulation.
And we saw Angelique earlier about, oh, I seem to be getting an echo, I don't know why. Angelique talking earlier about the whole latest fines that are coming out on GDPR now. How is that coming through, John? I mean, we talk, maybe talk through a few case studies of people starting to worry about the size of fines that may be coming, etc.
Yeah, I mean, the interesting thing is there's quite a few small fines that are being executed. I was just having a look. I know Cathay Pacific was fined recently back in May, £500,000 for a breach or failure to protect customer data. The larger fines are taking longer to hit. So I think most people should be probably aware of it because it was pretty well publicized here. There's 2 large fines by the ICO in the UK, one for Marriott of £100 million, and also an intent to fine British Airways £183 million for their data loss relating to the payments and bookings of flights. Those large fines are still in the process of being contested, and as many of the people on the webinar know, it's the same with banking fines. When an enforcement action happens, you know, the regulator sort of makes contact with the firm that they intend to fine, and there's a period at which that fine can be contested. So I think the interesting thing is these large fines are taking time to actually be seen through to conclusion, and also there's quite a bit of back and forth. Certainly, I'm sure you saw that Willie Walsh said that he intended to fight the BA fine tooth and nail for as long as he possibly could. I'd also say there's probably some reluctance in the current environment to hit firms with big fines as well, obviously, while we're suffering, you know, the economic effects of COVID. So I think there will continue to be small fines, and then I think the big fines will come, but clearly they take a while to actually be concluded and
And what I mean, how are you getting involved in this as Promontory? What's your role? What sort of things are you doing in GDPR?
Well, I think you know, in the run up to
yeah,
I don't know if you guys can still hear me.
A bit. What I might do is flip over to Samra while you sort out your tech a little bit there. Samra, when we were chatting about this, I can.
Can you hear
I'll
me
come
now?
back in a sec, but I'll do Samra. So talk a little bit about. I mean, you're based in New York, and obviously there's a very different regime in the US to Europe on GDPR. Could you talk a little bit about that and how the two regimes mix and transfer of data?
Yes, so there's one thing that's very unique about the US when you look at it from the GDPR perspective. We don't have at all a universal standard within the United States. There is no federal guidance. There is somewhat guidance, but there are no federal rules or regulations from in the United States. It's all a mosaic across various states, and all of them have just all kinds of rules and regulations. Many of them don't even really match up. Some have basics like the time to report is between 3 days to up to 60 days among various states, but that's only across 10 to 12 states. There are so many different states that actually have very lax regulations around this. When it comes to sharing data with the EU, the only thing that we have right now is called the Privacy Shield, and that's really something which allows the sharing of data for EU residents to the United States. And the thing that happens there is it's not GDPR compliant. It only complies with various laws of that particular jurisdiction in Europe. So again, there's a lot of work to be done in terms of data privacy and data security. What is driving enforcement, what is driving a lot of these regulations and standardization is really the private sector. So we have a group called the Financial Data Exchange, where there are a lot of different companies that are financial companies, credit reporting agencies, as well as banks, etc., that come together and sort of pontificate and come up with various kinds of regulations that they believe will actually that they propose, and they believe that that will actually advance the whole cause. But as of now, we don't have any single data privacy or data security regulations from the federal perspective. There is a legislation proposed by the Democrats. However, that obviously is very sort of a very low priority at this point, even though with the whole COVID aftermath, we've seen that there's a lot of risk to consumer information, but we have not seen much of that be addressed from the federal perspective.
And in relation to some of the big data breaches we've heard about out of the US, like the Equifax, like Target, how are they being dealt with?
Yeah, so the other things, there's the key to really data privacy regulation and actually effectively managing data privacy is transparency and enforcement. So both of those are lacking in the US right now. So the Equifax breach occurred somewhere between 2016 and 2017. So it continued to occur for a very long time and was only identified by Equifax in 2017. Then several months later, they actually came out with a very watered down report of, yes, we think some of the consumer records have been impacted. However, it didn't take up to, it took another 2 years for fines to be imposed and for reparations for the consumers who had been impacted. And the consumers only got, so it was around 150 million consumers that were impacted. The fines came to the monetary reparations that were given were around 700 million. It's a pittance to what actually the consumers went through, and to the sort of irresponsible actions of Equifax. However, again, enforcement was an issue. We did not have many data breach. We only came up with a Data Breach Security Act at the, and that too is not a federal thing, but that came into action in 2019. So this was after the fines had been imposed. The other thing is that there's very little enforcement authority. The FTC, the Federal Trade Commission, was actually part of the investigating authority, one of the investigators of this incident. However, they did not have the authority to actually charge Equifax or do any type of enforcement action, because they're only charged with enforcing repeat offenders, and Equifax was the first-time offender in this case. So there are a lot of gaps that are out there that really need to be addressed, and sadly, I think we've got so many other things right now that the United States federal body is working on that it's kind of being left by the wayside.
Yeah, well, I was intending to go back to John, but we seem to have lost him again. I'm sorry, I'm going to have to continue chatting with you, which is lovely for me. So the other thing we discussed a little bit was big tech and small tech and how they're treated differently. Perhaps you could expand on that a bit.
Yeah, so, well, the big tech, we've seen this very, we've seen, especially since the United States election of 2016, we've seen how big tech has been a driver in some of these nefarious activities. We saw Facebook and Cambridge Analytica, actually, as well as Twitter, with a lot of fake accounts, and also not protecting the privacy of user information. However, and actually selling them and using them for purposes that were harmful to our process. However, there are smaller, what we call innovation-driven enterprises. They're IDEs, or rather startups, who are coming up with regulation technology, or RegTech, as we're discussing here. And what they've done, for instance, just a couple of days ago, MasterCard acquired a company, a small startup called Finicity. And what Finicity does is actually aggregate and provide data, collect data from consumers in a permissioned and protected way, and then passes it on to various financial institutions. So it's an API, and basically it's a permission-based API that all the large financial institutions use. And what that does, actually, it does protect privacy, does a lot of the data secrecy actions that you would actually expect federal or state regulations to have imposed. But the partnerships between big banks, big tech, and smaller innovation-driven enterprises, the startups, is what is giving rise to the gaps that we are facing in data privacy and data security. And I believe that the government, the US government as well, is partnering up with many of these IDEs or startups for cyber, AML, KYC purposes as well, just to sort of close their own gaps. And also because these are innovation driven, they are nimbler, they're smaller, and they're more agile. They can adapt with these legacy infrastructures that many of these larger organizations have, and help close those gaps. So I know that John is back.
I'm finally back. Yeah, hopefully you can hear me now.
That's fine. We had some really great insights then. But if I could just go back to, you were going to take us through some examples of how Promontory was working with some of the clients in this whole area of enforcement and dealing with issues that were coming up and helping them to find their way through the maze of legislation in Europe.
Yeah, absolutely. And I mean, we do operate on a global basis as well. So something I'll come on to later is actually understanding multi-jurisdictional scenarios. So, you know, where a client is operating across borders. You know, there's the upcoming India data protection bill that we're doing a lot of work advising clients on. There's also POPIA in South Africa. There's LGDP in Brazil. So, you know, you've got lots of countries that have processes where data crosses borders or crosses jurisdictions, and they need to harmonize that. And we've actually seen that in financial crime as well. So a couple of our clients have centralized some of their financial crime processing. So they're bringing data from multiple jurisdictions into a central hub. And again, they've had to harmonize and make sure that they're taking account of several data protection jurisdictions or regulations when they bring that data together. But yeah, I mean, in terms of the immediate scenario here in Europe, I would say that obviously coming up to GDPR going into force in May 2018, a lot of firms were trying to get to a point where they had a defensible position. So, you know, they had the basics in place. They felt that they could turn around to the regulator and say, you know, we are doing the right things. We've got the basics in place and we have a plan to fill gaps. So I think a lot of firms got, you know, based on their risk appetite, a base level of compliance in place. What I think then we saw a little bit of a pause in many firms, you know, waiting to see what kind of enforcement or fining activity was going to happen post go live. But what we've certainly seen more recently is a lot of activity around the use of new technology. So, for example, you know, cookies and pixels and tracking technology, a lot of firms are actually not in compliance there. So there's PECA, there's e-privacy, there's other regulations beyond GDPR that firms have to meet. And certainly we've seen quite a lot of gaps around cookie compliance. And the interesting thing is now that firms have, the consumers have the right to complain. So actually quite a lot of our activity is driven by is consumers have complained about how their data is being handled. That's led to an ICO intervention, and then that's led to a shoring up of measures within the firm itself. So as I say, a lot of the privacy regulators are complaints driven, and as soon as consumers start exercising their rights, then that's driving a lot of activity at the moment.
Well, that's great. I'm sorry we didn't have as much time as we needed to speak to you, John. But thank you both, John and Samra. Samra, you did well filling in a lot of that time. But unfortunately, our time has run out. But thank you both. And clearly, if anyone wants to get in touch with John or Samra afterwards, put some questions in, put something in the chat. Any questions that are put in relation to the speakers here will be completed after the event anyway, so you can come on and see it afterwards. And obviously there's a lot of polls been going on, and hopefully you're all filling in those as we go through. But thank you very much to John, and thank you, Samra.
Thank you very much.
Thanks.
So moving on to the final but not the least of panel of the day, we have a great speakers here on cross-border. We've got Chad from Standard Chartered, Matteo from ESB, and Angela from Lloyds Bank. Angela, is everyone on? Sorry, the screen is behind another screen of mine, so I'm trying to see who's actually come on. Chad hasn't come on yet, but maybe we can kick off. Maybe Chad, you can introduce yourself while we wait for everyone else to join. You're on mute, Chad. Can you do an intro?
Hi, my name is Sunny.
Oh, sorry, there you are.
Yeah, I'm the Standard Chartered Bank. I'm the head of compliance for operations, financial markets. So that's everything post-trade, particularly EMIR and Dodd-Frank obligations that the bank has under post-trade applications.
Right, Matteo, could you give us a brief intro?
Yes, thank you, Robert. I'm Matteo Mannino. I work at ESBG as an advisor in innovation and payments. ESBG of savings and retail banks, which represents around 24 members in Europe, accounting for roughly 1,000 individual banks. And we strongly advocate for sustainable, responsible, and locally focused banking. And recently I've been working on topics such as cybersecurity or on consultations such as the European Digital Finance Strategy. And I'm very happy to join the panelists today.
Thank you very much. And finally, we've got not least Angela from Lloyds. Do you want a brief intro?
Absolutely. Hi there. My name's Angela Johnson-DeVette. I work at Lloyds Bank, and my role is head of technology change risk.
Thank you. Well, if we can kick off with Chad, because as I said when I had my previous chat with you guys, I think Standard Chartered probably has got the most operations around the world in relation to this. Cross-border risk is something that must hit your desk at least 100 times a day. Chad, can you give us a bit of info about how Standard Chartered works in this space and what sort of ways in which you manage that ongoing risk?
Sure thing. So we're a global bank. Most banks around the table would be, but we are traditionally quite a Far Eastern and African bank. Very little presence in the UK, barring a head office. That said, we've traditionally had a branch network. So head office and branch, but more recently we've moved to subsidiarization. So we've converted our European branch network into subsidiaries for the expectation dealing with Brexit, and of course that means that the risk management from the SCB London mother entity, we use a global approach that kind of it filters down, gets applied, and distilled across the network. So we use the same level of standards for our risk management. We don't have local risk management events and standards that don't fall into line. It means that senior managers in the bank have a proper, consistent view of everything going on everywhere.
And so, in some ways, it means you have to take the highest level of compliance across every region. Is it a highest common denominator solution?
Yeah. So, for example, there were certain elements of MiFID which were introduced that we just applied globally because it was a good standard, it was a high standard, and you don't want to be giving clients in any one particular region detrimental service based on what might be a lower standard of regulation or compliance in the region. So yeah, I mean, it's easier to have a high bar and apply the high bar than to sit there and have lots of bars and try and measure against them.
I'm sure your commercial teams don't agree with you.
Well, yeah, I mean, obviously you get a lot of, there can be elements of pressure, you know, they can say, well, actually, you know, my client's only trading this type of thing and they don't need to, but then you have to remind them that the regulation is there for their protection of their client. So sometimes the clients do complain, you know, silly things like getting an LEI, right? You know, the LEI, the open, transparent identifier for organizations across the globe now. But some firms will say, well, I'm only trading spot FX, or, you know, I don't trade in MiFID eligible products. Well, that's kind of fine, but having the LEI, it's a system that's been built for your protection. So why wouldn't you spend the bucks and embrace it?
And Angela, does that ring true with what your experience at Lloyds?
Yeah, so I mean, less so my experience at Lloyds, but certainly my experience at previous big German bank. And I think that there's always that option. So I think when you're a global bank, you've got lots of different regions, and each of those regions has got regulators, and each of those regulators ask for different things. And exactly as Chad said, in some instances, it makes sense to take the strictest regulator and then apply that across the full bank. But in some instances, I don't think it always makes that much sense. So I think some regulators are so strict and so difficult to deal with that if you put that standard across the rest of the bank, you'd be crippling yourself. So I think there's always that decision that needs to be made. So is this strict reg, something we're going to adopt globally, or are we going to leave it with that local situation, and that can be very strict in that local region, but then globally we're not going to adopt it. So I think there's a choice.
And do you get pushback from your commercial teams in those circumstances, or is it like Chad, he manages to convince them that it's for their best interest?
I think it's a little bit like being schizophrenic, because in one part of your mind you're thinking, let's be